back in. Today we are covering an important topic in 2024. We are helping a lot of clients downsize. So I thought it would be a great idea to do a quick video. This is going to be your blueprint on how to downsize in 2024 with all the different conditions that we've had. We thought it would be a great idea to redo a video and make sure everyone out there that is thinking about downsizing has a blueprint. So let's get into it. If you haven't been in a while, my name is Ken Angst, or if you're new to the channel, thanks for coming in. We help people buy, sell, invest, and live in South Reno and Northern Nevada. And if you like our videos, please share them with your friends and family. It would mean the world to us if you subscribe. We're a little different than other realtors. We're here to educate. We encourage you to take a look at all the videos we've done. We have several hundred videos on all the different aspects of buying and selling here in Reno. So let's hop in. Today we have a special guest. She's one of the authorities on downsizing and lending. Her name's Elena Boland. How are you doing, Elena?
Hi, nice to see ya.
So she's kind enough to take some time after her busy day. So we're asking all of our guests, New Year 2024, any New Year's resolutions?
Oh, it's changing for a lot of people this year. It's a different economy. Lots of changes going on, not just in the economy.
No, you personally.
Oh, for me personally.
Yeah, we don't care about everyone else right now. We'll get into that in a second.
Yeah, mine are pretty family focused this year.
Excellent.
I have kids getting older, and I'm feeling the push of them starting to want to leave the house. So a lot of family focused things in regards to spending time with them and getting to all their events. Yeah.
That's awesome, yeah, because we're both busy. We have kids and running around. But how many more summers do they have in your house?
The oldest one, this is his last. And then the youngest, I have 4 left. 4 summers left.
So enjoy it. I mean, we all work hard.
Yeah.
We're going a million miles an hour, but make sure you're enjoying those kids.
Right.
We know right now,
Yeah.
basketball and skiing and all this stuff. We're busy, but well worth it. So,
yes.
All right, let's hop in.
Okay.
So just keep in mind that if you need anything lender-oriented, let's call Elena. She's the one the best in town, great rates, competitive pricing, and best of all, she's here to educate, and that's why we have her in. So we're talking about the blueprint. We, our team is specialized in downsizing in the last couple years. If you want to see some of our success stories, take a look at the videos above. And this is to get you thinking about it. Just keep in mind that this isn't something that you do one day and decide I'm going to sell your house and downsize.
Right.
It's, if you want to downsize this year, you better start thinking about it now. So, lead us into step number 1. Start early in the process.
Right.
One of the biggest things that we see that is challenging for our clients when they're starting to think about downsizing is the emotional. You got to be emotionally ready to downsize. Any comments on that?
Yeah. I'm already thinking about it for my family just because my kids are getting older. And it's tough because sometimes you hold memories and associate them to a property, and really it's all about your memories, not the property. And sometimes it can be a lot better for you as a family to downsize so that you can spend more time with those older kids and go visit them in college and pay for the college and all those types of things. So it's definitely smart to think about it as early as possible.
Yeah, and there's this the full range of emotions that we have people who are still married that want to downsize and travel. We have people who've had a spouse pass away. So there's a lot of emotional attachment to properties, especially if you live there for 34 years. We've dealt with it all, so you got to be ready for that. And we want to prepare you. Downsizing is not for the faint-hearted. It's a process that is tough, but with the appropriate people in your life, you can do it. And we have a lot of people who are stuck in the sense that in their mind, they're like, wow, I can't do it. So that's why we're doing this video, is to help those people. So be very clear on when you're ready and why, the big why. So start the process early, know why you're doing it. Number 2 is, we go through this a lot on our channel. You got to assemble the correct group of advisors.
Right.
So give me some examples of advisors that you have in your mind when someone starts this.
A new professional organizers. Love them. They are saints.
Yes.
There's things talking about emotions that you are too attached to purge and organize. And professional organizers, being the professionals they are, come in and take emotion out of it and just help you with logic. Some of it is as silly as your refrigerator, because you feel like you need to have a ton of food that would have freezer burn, or half of it's expired that you've got sitting there in cans. So it can be super simple for them, but tough for you. So bringing in a professional is always a great idea.
Yeah, so organizer, what we start with, generally speaking, is we'd love to earn your business, but if you're out there and you're just looking at this video, want to get the process started, a realtor is probably your best bet to start with. And if they're a really good realtor, they should have 3 or 4 deep on all these people that we're going to discuss right now. And they're the ones that are going to be basically the quarterback. And then we're going to fill in the slots with the people you need. So on our list right now for step 2 is realtor. Got to have a good lender, because sometimes you have to have bridge loans, and we'll talk about all that in a second. We strongly advise you to talk to a financial advisor. Because there are some big decisions you're making. You better know all the consequences of downsizing, making sure you afford it, making sure you're accomplishing what you want on your financial side. You're going to need to talk to an accountant or a CPA. We have a lot of people who've owned their house for 40 years, and guess what happens if you own the house for 40 years?
Capital gains.
Capital gains. Especially if you have a spouse pass away, you got to know all the rules and regs on stepped up cost basis and all that. So make sure you're talking to a CPA, talk to an attorney. If you don't have a trust, we have great trust attorneys that can help you. You got to talk to an insurance agent. These are all people that you need on your team, and a lot of people forget about all these, but is your house properly insured? And it's changed quite a bit. Professional organizer is another one. And the biggest thing that I see people miss out on or don't think of is friends and family. And we have a lot of people who live here and don't have their kids. They moved away, so they're missing that emotional support. So if you can get them on board, that helps out a lot.
Yeah, especially early, so they're not shocked as well. Sometimes it's a process for the whole family.
Yep. So step 2, make sure that you have all those people in line. We don't expect you to have a specific person for all those, but we can help you, put you in touch, and get the right team in place. All right, number 3. What's number 3?
Assess your current home and situation for asset protection.
Yeah, so that's a big one. A lot of people don't think about this, but the first thing you should be doing is have a big asset. Typically, most of their financial wherewithal is in their house, especially if you've been there for 30 or 40 years. It's a big asset. You better make sure that the current one you're in is protected. And I'm going to give you a quick list. We have videos on almost every single one of these, so take a look, do a search, and you'll find it. Make sure you're homesteaded.
Big deal.
A lot of people don't know what a homestead is. We have a video. I'm not going to go into it, but basically it is a form you fill out, protects your house up to $615,000 in equity if someone were to come in and try and sue you. And we can get more into that. We have an attorney to talk about that. Make sure that you're set up. There's a big thing going around. A lot of people are being defrauded with recorder fraud.
Scary.
Yeah, so we actually had someone in our market recently, somebody faked to be a landowner and attempted to sell the lots and almost got away with it, but the title company at the last second did a check and said, I need your ID, didn't produce the ID, so they almost got away with selling them. So.
And those genuine things that can end up on the title of your home too. Sometimes people will forget to pay the last $1,000 on a roof, and it can be put onto your home as a lien, and you don't know. So this is a really important thing to sign up for. So make sure that you sign up for recorder notifications through Washington County. It's a relatively new topic. You basically put your name, number, your email, and your different names, and you'll get an email when someone tries to record something. Free service.
Free service. So you don't need to go sign up for one of those ones online. You can do it free right through Washington County. We're not encouraging you not to look into those other services, but this one's for free. The biggest mistake I see people have right now is not having a trust in place. What people don't think about is people become incapacitated, something happens, and you certainly don't want the state of Nevada telling you or your beneficiaries what to do with your property.
At any age, very important.
So make sure you have a trust and make sure it's funded. one of the biggest things that we see, especially in our market, and she can talk to this because you have to have insurance when you get a mortgage, is make sure you have an insurance checkup with your insurance agent.
Right.
Particularly rental properties, we've had a huge run up. Make sure you have the appropriate liability coverage in place.
Rent loss coverage.
Yep.
Huge one for that. Think about it. If you can be insured against rent loss, that's something that you need.
Yeah, so take a look at your current property, make sure it's insured, so if something happens during the listing process or you're trying to downsize, you can make sure that it's replaced because you don't want to lose that. So, anything else on asset protection?
Just staying on the insurance subject there, you'll see a lot of times there's a portion of your insurance called a replacement cost estimator. Just talking about being short on your insurance. For a lot of us, the values go up every year. And your insurance stays the same because it's tough to, as a homeowner, want to call your insurance agent and ask for a bigger premium, of course, but just like you were talking about, that's the biggest asset for most families, so it's still really important to keep up on that insurance and make sure the value is protected as well.
Another thing that we want to add on to this real quick, we have videos and all this, we have an insurance agent we just interviewed, so go check out that one. Earthquake insurance, we're in a very seismically active area. People don't know this, they come from California and they think, oh, and people locally, we're in seismic 4. So keep that in mind that these mountains and hills are beautiful, but they're here for a reason.
Right.
Earthquakes,
Yes,
that's
they
how they're
move.
formed, they move. So, what about number 4?
Assess your current home value and determine what you are going to net from the sale. I can't tell you how many calls I get from homeowners who say they're selling their home and they're gonna downsize or move up, and I ask them what they're going to net because that means how much money you're gonna have available, and they have no idea of the number very often.
So there's several ways to do this. 2 ways, options. You can have your realtor do a detailed, what's called a broker opinion.
Or right, with your value and your net sheet.
Yeah, so basically we look through the assessor, figure out what you're going to sell it for, take off all your closing costs. If you're not anticipating 5 to 8% with all the goodies that are out there, and then minus your mortgage, we have a net sheet so you can contact title. They'll take off all the typical costs so that you know what you have to play with.
Right, super important.
Now, we have an interesting right now. You know who you are, but we have several people in Incline Village wanting to get off the hill. And I can tell you now that those are very difficult houses to figure out evaluations.
Right.
Because you might have a lake view, you might have a this and that. So another thing that we're seeing is people just going out and hiring an appraiser and getting it done so that you have something you can provide. Now, keep in mind that just because an appraiser says it's worth it does not necessarily, and that's what it is, but it'll give you a very good idea.
Right.
So if you're working with a realtor or in an area that comps are hard, or if you're concerned that your realtor may not have the best value, spend $500 or $600 and get it. So, what else here? Once you figure out your assessment, so you're going to net this much, talk to your CPA. Just make sure you know the tax consequences. We are not accountants, so just keep in mind that right now it's $500,000 per couple that you get above and beyond what you bought it for. But make sure you're looking into that, talking to your CPA, because the politicians are always trying to change that number, and just because we say it right now does not necessarily mean that's what we.
Right.
What else?
Setting up a meeting with your financial advisor once you know that net amount, because that's going to help you setting up your long-term goal and plan, especially if you're moving into retirement or if you're already retired on a fixed income.
Yeah, so that's important because you might have some more money you can play with. Make sure that if the reason why you're probably downsizing is want less house, less expenses, so that you can take some of that little nest egg that you built up in your house and equity and retire. So make sure you're talking to someone about that. And make sure that you can afford the new house, because if you have to get a mortgage, you need to calculate that into your financial plan.
Yes, definitely.
All right, so we're cruising along. We're halfway through. What about number 5, Elena?
Your budget. Budget's huge. It's just what do you want your lifestyle to look like, and that's what you want to base it around, along with your ability to borrow if need be and pay every month.
So one of the biggest challenges for a lot of our clients is they have the majority of their assets I would say that they're house poor, in the sense that they have a house they lived in, bought for 200,000. Hopefully this is you. It's a high society problem. It's worth 1.8 million.
Right.
Let's just say it's worth $1 million. A nice run up. You know, what are you gonna? You have to sell this to afford one. You have to know your assets. You better be talking to a lender, because a lot of people can't go buy. If you're gonna downsize, you probably want a $500,000 to $600,000, $700,000 house, but you can't get there until you sell your house. So these are all things that you need to talk over with your realtor. No, talk to a lender. What are some options? We're gonna kind of go deep here on if you're a person out there, which is a lot of people have $1 million in equity, but you need it to buy. What are some options? What are the 3 different options?
You can do a contingent sale, you can do a bridge loan, or you can do a home equity line of credit.
All right, let's go into those 2 lending ones, and we'll talk about contingent sales in a second. What is a bridge loan? How does it work? What are the interest rates look like?
A bridge loan is essentially, it's a separate mortgage, because you're gonna end up with your permanent mortgage on the home that you're purchasing. A bridge loan is just kind of a temporary loan that bridges you over until your house sells. You pay it off, it's a very temporary loan. Because it's temporary, it's higher risk for all lenders, so the interest rate is always gonna be about a 0.1% higher than the current market rate. So if they're 5% today, a bridge loan is gonna be 6%.
Not bad. And then is that, so what's the amortization look like on that? Is that,
They're spread out over 30 years. They are, but you have to pay them off before a 30-year term, of course. Those are set up to typically last between 6 and 12 months, and if your home doesn't sell in that 6 to 12 month time frame, then you do have to pay more fees for that.
okay. All right, now what is a home equity line of credit?
That's a home equity line of credit. You'll hear the acronym for it super frequently, called a HELOC.
HELOC?
It's literally a line of credit with a lien against your home. So you use it, pay it off, reuse it, pay it off at any frequency that you would like. So a lot of times people will get a home equity line of credit for $400,000, and they'll use all of it, and they can pay it back a month later, and then they'll use it again, or they'll sell the property and pay it back. But it gives you that availability, that cash availability, to help purchase another home.
How much can you take out on a house? And what are the interest rates?
You can go pretty high these days. You can usually go up to about 90% of the value of the home that you own.
But if we're buying a house, right, a second house, and they have the income to do it, you wouldn't necessarily want to do that, right? You'd probably get 20%, or I mean, obviously there's reasons why to do a thing, but you wouldn't do that, right?
It's different for some people, because some don't plan on holding a mortgage permanently when they purchase a new home. So that's typically for someone who just wants to pay it off entirely.
Okay.
If you want to, you can take a smaller home equity line of credit and just apply that as your down payment, and you start off with 2 mortgages. One gets paid off when your second home sells.
Okay.
The smaller mortgage.
So someone comes in, offers the money, but then let's talk about, so they have a mortgage. What about recasting? What is that?
I love recasting. It's wonderful.
Now, does every lender have it, or do you have to ask to make sure it's in your product?
You always do want to make sure, but typically any conventional loan that's Fannie Mae or Freddie Mac backed is going to have the recast option. So you can't do it with an FHA, VA, or USDA loan.
I didn't know that.
Yep.
But what is recasting? Because people don't know.
So recasting gives you the ability to pay down $5,000 or more and permanently recast what your payment will be. So $5,000 is a minimum that you can utilize, but it can be $100,000. It can be $400,000. So you're paying this giant chunk on your mortgage, and it permanently recasts what your payment will be based on that new smaller loan amount.
It doesn't change the time frame.
Nope.
It just lowers your balance, and then the interest rate with that balance recalculated, and you have a new monthly payment.
Right.
It's still over 28 years or whatever you have left.
Right. Yep.
How many times can you do it? What's the cost?
It's usually about $150 per occurrence. Pretty fair. It can take a different time frame with each servicer. So if you have a loan that's sitting with Wells Fargo, it can take 3 weeks. If you have a loan that's sitting with Bank of America, it can take 5 weeks. They're all going to be a little different, and they are all a little bit slow because it's not a super high priority service for them, right? So just plan on having to follow up a couple of times, Sometimes they will recheck your value too if you've had your loan a long period of time, but not very often. It's pretty straightforward with the steps in that way.
Okay, so those are all options. If you have a lot of equity tied up in your house and you need it, and you don't want to do contingent sales. So
Right.
let's talk about contingent sales. So contingent sales are a challenge.
Yes.
I'll put a video up. Elena did it. It can be challenging. So basically what a contingent sale looks like if you're trying to downsize is the best way to do it, and we can talk about other way, is to actually get your house ready. Put it on the market,
Right.
and have specific language in there that allows you to find your replacement home within a certain period of time, 30 to 45 days, and then close 40 days after that. So what happens is you get an accepted offer on your house. The people that buy your house understand that you have 30 days to find a replacement home. If you do, what happens is that you run your sale, the new home, and your sale concurrently. Yours closes, and then you take that money and buy the new home. Now, that can be tough in this market. There's only 600 homes available. So that's a tough one, but what we're finding is most sellers in this market are not going to accept a contingent offer when you don't have your house in the market, or if you're not in contract.
Right.
Now,
put your best foot forward, show that you're ready.
So if you're in a spot where you find you need to do a contingency, you got to start doing the legwork now and make sure your house is ready, and we'll talk about that in a second.
Right.
But the best thing to do now, if for some reason after 30 days you're in an escrow and you can't find a house, you have like two options. You can extend the escrow another 2 or 3 weeks. That allows you more time to find a house, or you can cancel the contract, let the buyer out.
Right.
But it does lock up your house and the buyer for a certain amount of time that's negotiated.
Yeah.
So that's the best way. We do have people who've tried to do contingent sales where they're a little nervous, which is understandable, to put their house and have an accepted offer. But what they'll do is they'll go put an offer in and try and get it accepted by some other seller, and then list your house, which we don't recommend.
Right.
Because it really limits the number of people who are going to consider it.
It's just important to know that the contingency word means that you're protected essentially from being homeless. You're
Right.
never going to be kicked out before you have your new home in place. So that contract that your realtor helps write for you protects you.
Yeah, you better talk to an attorney, but we have the language that you should be using to make sure that you don't want to be homeless. That's the biggest thing. The other thing you can do is, the other two options in this case is you have a lot of money, you buy a house, and then you turn around, get moved into that, and then put your house for sale. Dangers of that is the market crashes or something crazy happens, can't sell your house. So then you own two houses.
Yes.
The other thing you can do is if you live in a house that you want to rent, sometimes people make it a rental, rent it and then move, you can do that. The other thing is that we see people do is, if they have the ability to, is sell their house, get all the equity, and rent or move in with a relative. So we've had several people do that where they had a space. Not everyone has this ability, but it's just all the options that you have when you're looking at selling your house. So once you figure out what you have to do, you talk to your accountant and how you're going to buy a house. The fun part is you have to talk to your realtor, figure out what size house you want, look at your belongings, really analyze, all right, what do I need to get rid of, where can I move, figure out where you want to live. We have people that move out of state. We have one of our biggest success stories. She knows who we're talking about. Her husband passed, and we found a 55 and older community in South Reno. And it's a game changer. She has friends. A lot of people will go to the club. It's big social, so it's been a home run, changed her life. So got to figure out where you want to live. If you're moving out of state, do you want HOAs? The whole shebang. So make sure that the other thing that we're talking about, and she spoke of this last year, is look at taxes. So we just did a huge interview with the Washington County assessor on how to calculate property taxes. So if your home is newer, what happens? This is one thing that a lot of people who own a house for 30 years, 40 years, their property taxes are very low. Elena, what happens when you buy a new house if you go buy it? Because a lot of people that are downsizing don't want to deal with an old house. They don't want all the maintenance, so they will go buy from a new home builder. What is the challenge with that?
You're going to pay the highest tax rate possible in the state of Nevada, super similar to buying a home in California. There's no depreciation applied, as to where if you buy a resale home, you have depreciation applied every year, and your taxes can be a lot cheaper. I'm talking half. It can save you $200, $300, $400, $500 a month on your house payment. So it's really important to look at that and make sure you know to check with your lender and have them run the actual payment on the homes that you're looking at and compare the differences between the two, because one home can be 10 years newer and the taxes are $400 a month more expensive. Very important.
Yeah. So that's something you need to really dig into, understand that. We have a full video here that look into that, understand that, because if you're trying to downsize, one of the things people are trying to get less, pay less taxes, pay less insurance, have less HOAs, and people start looking around. We've had this happen recently, and they're like, wow, if I buy a new home, I'm not actually saving any money.
Yeah, it's a real important question for your lender to ask and clear up with you. What is your goal in downsizing? Some of it is not just the actual size. It can literally just be wanting a smaller payment. So, and your lender can do the work for you. You really don't have to figure out how to calculate taxes. If you give your lender the specific addresses, we can always do that for you as well.
Yeah, you don't need to calculate. You just need to be aware that if you're buying a newer home, property taxes can be hundreds more a month.
Yes.
So, all right. So once you figure out where you want to live, start looking at houses with your realtor.
Yeah.
But simultaneously, this is where number 5 and 6 kind of merge. Is just you gotta prepare your house for sale.
Yes.
All right. Any ideas? So first things, I'm gonna give ourselves a plug. We have a blog. We have on our website. We have a blog on how to downsize. We have a ebook that we can send you. It gives you, it's 45 pages, gives you the ins and outs of, because a lot of people in this downsizing haven't sold or bought a house in 40 years.
Right.
It's a lot different than the 90s, than now, and the market's always changing. So read that book first. So get a copy of that. We can put a copy up there. And then one of the things that we see a lot of people having great success with is getting a pre-home inspection.
Yes.
Especially if your house is a little older. People just don't know. They haven't been under their attic, haven't been under the crawl space. So we found that if you get a pre-home inspection, you pay for it, fix all the things on there, gives you an idea of what the issues are, and you can mitigate it up front.
Right.
Because the worst thing you want to do is get into a contract and either have the buyer back out because of something in there, or if they're going to really hit you hard with negotiations.
A lot of times too, we'll just see deferred maintenance.
Yes.
You know, I'm a homeowner. I don't want to get in my crawl space ever, so I don't go up there unless something's wrong. And the job of the home inspector is to pick your home apart like a buyer's inspector would. So just preparing yourself for that and knowing all those little things can put you 10 steps ahead of everybody else.
And it just puts you in a better spot. In this market, while it's still a seller's market, buyers are very finicky. So if they start finding anything wrong, especially in an older house, they're paying 7%, they're backing out. And then the problem with people backing out is it gets your house to have a weird stigma, and it's hard to explain away why people back out. Because obviously they're going to want to know, if they're a good agent on a buyer, they're going to go, why is it falling out? You know, so do that up front, and then the realtor or an engineer can help you determine on which ones you're going to fix. We don't recommend fixing everything, but big items, get it out of the way, or offer credit up front. And that way you can turn. So now what you've done is, a beautiful thing is, you probably have a home inspection done. You have probably an appraisal done. So you have two of the biggest contingencies wide out in the open, and you're trying to eliminate all these to make a buyer feel really comfortable with buying your house.
Right.
And what we found, talk to your attorney, is it takes a little bit of the liability out of selling your house, because it's going to be hard for someone to come back and say, hey, you didn't tell me about this, because you have to fill out what's called a seller's real property disclosure form. But if you have a home inspection, say, hey, here's an independent third person looked, here's all the issues, it just makes your house a lot more sellable.
Right.
And then the biggest thing, once you have your house analyzed, the fixes are being done, now you got to start hiring that professional organizer. What's your experience dealing with those people? I mean, we talked about it up front, but it's an important person to have on your team.
Yeah.
Because they help you pack, right? They help you figure out what should be sold. A lot of these companies now offer auctions. They'll have estate sales. What you don't want, especially we see it all the time, is people get overwhelmed, they get an accepted offer, and then they haven't done all their homework on downsizing. So a lot of stuff, invariably what happens is a big, huge dumpster comes in and everything's just thrown into it.
Right.
And that just breaks my heart. A lot of memories lost in that. So start thinning that out now.
Yeah.
Talk to a professional. And the beautiful thing about a lot of these organizers is they can help you pack it, get it all ready, saves you money with the movers, and then they'll come unpack it, help you get it organized.
Huge.
So take a look at that and start thinning stuff out. Anything else on that? But just important.
Just in regards to like the memories that you have to pack away, the professional organizers will even, I've seen one of them, she hired a photograph organizing service, which was wild to me. I didn't even know that existed. Put it all into organized albums based on the year, instead of, boxes of unorganized things, and it just made it something that the client could actually look at and enjoy versus having boxes up in the attic. So real important and helpful.
That's awesome. That's a great idea.
Yeah.
Especially if you're a senior, digital is pretty new in the last 20 years.
Right.
If you've been around, if you're in your 60s, 70s, you have a lot of memories probably on film.
Right.
That's how it was done. And a lot of people just stick it in a box and forget about it. So if you can make it so that you can enjoy it, that's a great idea. So, all right. So we have identified any issues with the house. We fixed those. We're thinning the house. Now we're going to talk about marketing tips.
Right.
So now you've identified, you're trying to figure out, you're still looking at houses, trying to figure out the perfect house. But now we're moving to the meat and potatoes on how we're going to sell your house. So a few tips. Take a look at our book, but these are the top ones we have. We're going to talk about have your house professionally cleaned.
Yes. After it's cleaned out and organized, the cleaning is so important. You can see any little thing on good professional photos, so that's huge to make sure you do.
Well, the other thing too is professional photographers can hide a lot of things.
Right.
So you go to some of these houses, I've taken some clients and you're like, man, it looks beautiful in the pictures, but we get here, it's dirty, the windows aren't clean. So get organized. It's only a couple $100 to have someone come in. It's nice to get your house cleaned. If it hasn't been that way in a while, get the windows cleaned. Obviously, you're going to have professional photos taken. Don't be having somebody take iPhone photos. That's if you have a person doing that, they're not really a good realtor. Don't be doing that, regardless of the property.
Please.
We do a video tour, so we have a professional videographer come in and run you through the house to give you an idea. Pictures are great, but they don't give you a sense of what the layout is.
Yeah, that's really great too for out of area buyers to get that experience.
Well, that's a great point. But the other thing is that's also a good point is digital marketing. You gotta have great photos if you want to get your out in social media and really show off your house. So one of the things that we do, I love to do, it's one of my professions. I'm a professional drone photography. So if you have the right house, especially up off the Mount Rose Highway, you can do awesome drone videos, get several thousand views, get people to come in and really show off the area.
Definitely.
You can do a dollhouse, which is a videographer comes in and puts a camera every 3 feet and it takes a picture and you do these. It's basically you come in, you can see the whole house. That's another option you can do. Digital marketing is huge. So if you have a realtor not doing digital marketing on Facebook, LinkedIn, Instagram, Google ads, Facebook ads, those are all things that should be included in whatever a realtor helping you, and that just helps you get your house out there. And basically you can target people that are looking for in your area.
Right.
You gotta follow the fair housing guidelines, of course, but you can get that. Open houses are back. We sold a house off in the States of Mount Rose last year from a person that came in, didn't represent themselves, from an open house. So if we didn't have that house opened, we wouldn't have sold that house. Came in, cash buyer, bought it, and the rest is history.
Right.
And they were a person that never saw it online. They saw a sign. They wanted to live in the neighborhood. They were driving around. So open house are back. And we strongly consider, most realtors like ourselves have a stager that will come give you a free estimate on what a house to stage. Now, staging can be expensive, but there's a lot more competitions, particularly in the upper end. If you want to sell for top dollar, it is good to talk to a stager and see what that costs? Any comments on that?
It's just all about putting your best foot forward again with the planning. It's not something you always will see people opt for, but you can tell when they're staged properly. They look beautiful.
Yeah. And we're a big believer in, it pains me to look at houses that I'm going through with buyers. Man, if your windows aren't clean, the cobwebs aren't gone, it's not professionally clean, you're trying to sell these things, and the median home price in Washoe County is $565,000. In most cases, we're trying to sell houses in the $2 to $5 million range.
Yeah.
If you can't spend a couple $1,000s up front to make it beautiful, yeah, it's just not going to get top dollar.
Yeah.
So, especially when high interest rates are around 7. So, those are marketing tips. Feel free to call us if you want more on that. So, we're going to go step number 8. We're going to kind of give you a summary. So, it's an overwhelming process, but with these 8 steps, it can be done. Get going early. So, just a quick summary. Start the process early. So that's why we're doing this video in January 2024. We did several last year that take 3 to 4 months to get it ready.
Easily. Earlier the better.
Use a realtor that has experience in downsizing. Because there's a lot of, don't just be hiring anybody you know. Make sure you ask, who can I talk to? Do you have references? Who can I use? Any comments on that?
Yeah, I think a lot of agents have a lot of experience with buyers only. When you're buying and selling at the same time, experience is going to be a huge differentiating factor for whoever you choose to use as your realtor.
Yep. So, number 3 we have on the summary for number 8 is price your house to sell. So keep in mind that the median home is staying on the market for 43 days right now. And what we see, it's the has and has nots. If you overprice your house and are ridiculous with price, what happens is that there's a stigma that comes out.
Big time.
And then if it's on there for more than 90 to 120 days, I mean, obviously in the upper end, that's pretty generally what you're going to see. But if you're on there for half a year, no one's going to come look at your house. You can't drop that price fast enough because people are asking, why is that house not selling?
And then it's they don't just think price drop. They think something could be wrong with the structure of the house. People really start reeling. So it's very important to get that price right.
So another tip too is you can soft sell credits for buyers to give them closing costs to pay for maybe some closing costs, maybe to buy down the rate, make your house more attractive. Keep in mind that you're trying to sell and buy. So you have to be a little bit more willing to negotiate, offer something up front that gives someone an incentive to buy your house so that you can attain your ultimate goal, which is the downsize. So any comments on that? Because you see, are there a lot of people still getting credits, or does it depend? What is, in the last 6 months, buyer credits? Are those still a thing? Have they gone away with the tight market? What is it?
We're still seeing quite a few of them come in on contracts. Not so much in the higher end homes, but definitely beginner homes, first time home buyers, lots of credits are coming in, and really they're also typically necessary for those buyers right now. So think about if you're a seller and a younger family's buying your home, it's really important to consider being prepared to be asked for that.
Yep. And maybe not put in the listing, but have your realtor discuss it with other realtors that are showing the house.
Yes.
So just give people options. Because the ultimate goal here is there's a reason why you need to downsize, and you're looking into it. So I think that's it. I mean, this is awesome. So there's your guide, all updated. We did a video last year, but we do one once a year, and we create one that's based on the market conditions. Market is very tight still, and not as much on the upper end, but anything under 600,000, if it's priced right, are going quickly. So keep that in mind when you're selling. Trying to find a house in that 6 to 7 range is very tough. There's not a lot of inventory, and they get snatched up. So you have to be kind of prepared to go in strong on those. So, because what I see a lot of people is they're trying to sell their house, and someone gets a credit, and then they feel that they're entitled to that credit on a lower end house. But the problem is there's a lot more competition in the 6 to 7 range than if you're in the $2 to $5 million range.
Yes.
So always just reach out to us if you have questions. You want to go to lunch, talk about this, or if you have like a lender question, Elena's always ready for coffee. and we can go out and talk about anything you want. So, otherwise, make sure you're tuning into our channel. Like I said, we're trying to educate people about all the different stuff on what it takes to buy, sell, invest, and live in South Reno. It would mean the world to us if you like our channel. And watch for several more videos coming out next week. Until next time, you guys take care and thanks.